It is Friday, the 10th of July, 2020. Hope you had a good week. The markets did for the most part, except the Russell 2000 and energy. So let's take a look at the action on the charts and make some sense of it. We remain in a strong uptrend. The S&P 500, as we know last week, got beyond a little bit of resistance and that it held above as support. It's trading now in a tight range the last few days as this market remains above the rising 5-day moving average. We came down briefly to the volume weighted average price from the low of late July and June rather, and that was where that bounce came from. And again, we're back above that rising 5-day moving average, and the pattern of higher highs and higher lows is more extreme and pronounced on the NASDAQ, where we see again we have that pattern we've been talking about over and over again for several months now, actually, with these higher highs and higher lows. Right now, again, the market's getting extended. To me, making new purchases up here might not be the best idea. You would want to wait for the next pullback to then right itself. And what we want to be doing is buying as the market rallies away from pullbacks, not at those highs like we've seen. It does remain in a strong uptrend above the rising 5-day moving average, so it's certainly not a sell either. This market, the Nasdaq in particular, has been really fueled by some of these big names. Amazon, huge week. Of course, then you've got Netflix, which was up really big as well. Tesla, the stock's up 50% in the last 7-8 days. Just kind of amazing strength out there. Russell 2000, as we know, is the laggard. It's still holding above that rising 50-day moving average. And on the 30-minute time frame, you can see it's below the declining 5-day moving average. So it tells us basically just stay away from it. The daily time frame suggests that it's likely the 50-day moving average will hold it up in this area. But there's just no upward momentum, so no reason for being involved in the Russell 2000. Semiconductors are 1 day off of all-time highs. That is, yesterday they closed at a new all-time high, and today a slight pullback. But again, just a very strong market, and this 154 level is going to be the important level to keep an eye on going forward. It was this week. As we got above it, it's now holding still above that level, so that 154 will be important to watch. The biotechs kind of slowed down a little bit here this week. They did exactly what we wanted to see them do from last week, which was to continue that pullback and then rally off of that 20-day moving average. That's what we have. But on the 15-minute time frame, it's just kind of stalling out here. Doesn't mean it's bearish by any means, not when you have a market that strong on the daily time frame. The financials did recover. They came down just underneath that prior low right here. So they and a lot of times that's what happens is you get an undercut of a prior low, 2252. You can see we got down to 2249. It held there. That's the key. It broke down through it ever so slightly, but then trapped short sellers and got up quickly. This is again why you don't look to sell short new lows, especially after it had just dropped from 23 and a quarter. That made it short-term extended. The people who got short under there got trapped, and that's why we had this bigger momentum in here today. There's still some great setups out there, and every day I talk about them on Twitter. If you don't follow me, it's at Alpha Trends. I'd mentioned this HIMX is one that's looking good. Nice looking weekly chart. The daily time frame, it's got a nice little consolidation. I don't own it yet. I'm looking to buy it probably next week. You can see the volume weighted average price off of these peaks are just overhead as well as from this level. So realistically, for this one to get any momentum, it needs to get probably above $4 a share. If it did that without undercutting this low first, I would say that's where a stop would go for that. Fuel cell continues to be a strong one. Hopefully you're involved in that. I mentioned it before the breakout down in here several times on Twitter. I would say you can also keep an eye on LITE next week. This one broke this triangle. You can see it's consolidating on lighter volume since that breakout. And here's the weekly time frame. It's got room to run. The thing is, it's a choppy stock, so just be aware of the personality of the stock. This is what I was looking for a couple days ago, was a pullback and then get going. It didn't do that yet, so when I draw that in, it means that I'm not long it yet. I'm looking to get involved, and probably it's going to need to do something like this, rally up towards this 84.34 make a higher low, and then get going. 84, whatever, I don't know what that high is, 84.50, I guess, 84.56 maybe. Anyways, that's a good one to keep an eye on. You could also keep an eye on CGNX. This is one that has the ability, I think, to get going. Every day I talk about new trade ideas, low risk, high probability setups, and where stops should go and that sort of thing on alphatrends.net. I get very specific and educational. So take a look if you haven't.